Okay, congrats on getting a nice hold on the strategies. Now let's jump to the most interesting and fun part of this course, which is merging the price, the indicator strategy, with the price action. So we have a graph on the 5-minute time frame from gold US dollar. Given that all the conditions are met for a sell following the strategy presented earlier, as you can see, stochastic RSI is right where we want it. We have a nice retest followed by a nice bearish candle. So all the conditions for the sell are made here. So please pause the video and try to think if you would open a trade here, a sell trade here, and why, or if you wouldn't open it, why wouldn't you open it? Okay, so if you said that you wouldn't open a trade here even though the indicators tell you so, then you were absolutely right. This is the lecture where we are going to talk about the price and the market bias, in the short term at least. So if we are trading on the 5-minute time frame as we are right here, we can see that the short term bias for the price is bullish, right? We can see that we have some nice bullish action followed by some mellow descending channel right here. So what I'm basically saying here is, even though you were to open a sell trade here, price may go your way, maybe up until this area or so, but then it would be most likely for it to break this channel to the upside and continue its trend. But just let's see if we were right. Yeah, so as you can see, after this nice impulse, we have a descending channel, which we will talk about in a few moments. And this channel got broken with impulse. As you can see, all the EMAs are crossed and we are probably poised to witness another push to the upside. Okay, let's take a look at this example right now. We are still on gold, still the same strategy. Now, as you can see, all the conditions are lined up for a buy. As you can see, the light blue EMA is above the orange EMA. We have a nice retest on the purple EMA with a strong bullish candle closing. The stochastic RSI is right where we need it. Now, think if you would buy, given that you have this data from the market. Again, pause the video if needed. Think of reasons if you would buy here. Think of reasons if you for you not buying here, and replay it once you're done. Okay, so again, if you said that you wouldn't buy here, you were right, mostly because of the current market bias. As you can see, we had strong momentum to the downside, followed by a slowdown in momentum. Then we pushed to the upside, but how did we push to the upside? Again, without any huge momentum. We only had a small ascending channel that, by the way, got broke on your entry. So if you were to not spot this price action aspect and just enter a buy here only because the indicators told you so, well, this is what would have happened to your trade. Again, you don't have to look all the way back in the chart. Just look at at least the last two market structures that you can identify. And if you don't see anything that is in accordance with your trade, just don't take it. It's better to miss good trades than to take all the trades and to have lots of losing trades in your process. I don't know if I made sense there, but I think I did. Okay, so let's see one more example of getting in accordance with the current market bias. Okay, this is the final example. We are still on the same strategy, on the same pair, so gold US dollar 5-minute time frame, the EMA strategy. Now, as you can see, the conditions are met for a buy right here. We have a nice retest on the orange EMA, the EMAs are nicely fanned out, and the stochastic RSI is right where we want it. Now, again, pause the video. I hope I'm not spoon feeding this to you, but it's paramount that you understand how to implement price action with indicators. So pause the video and think if you would open a buy here, and if not, think why you wouldn't open it. Start now. Okay, so this was quite an obvious example, but I wanted to make a point. Yeah, this is a clear buy right here because as you can see, the market is trending quite strongly. We had this impulse followed by a nice ascending channel that got broke to the upside, and we are having a sort of a bull flag formation right here. So let's see what would have happened with your trade if you were to enter a buy on this candle. A bit of a ranging action, but then your target would have been hit for sure. As you can see, no, there wasn't any issue regarding the stop loss. So this was a successful trade. So the point that I want you guys to take from this lecture, which is quite an important lecture, that's why it was first in this section, is that you do not have to follow the indicators blindly. And if you are to learn how they work and merge them with price action and try to filter some of the trades yourself, if the indicators can do that for you, that would take you a huge step forward in your trading activity and in your trading process overall. So again, as I don't know, just a review of what we said so far. Again, identify your setup according to your indicators, but be sure to look back left, at least identify 2 market structure items that match your current trade. And if you can't find those, then you are better off not taking the trade. Yeah, times may come where you don't take a trade, the trade goes as you want, and then you may feel frustrated, but that's not the point. You will see while backtesting and while trading your real account that the times that this happens aren't really that numerous. So you're best off staying sheltered if the market bias isn't on your side when opening a trade.